If you're watching this video, there's a very good chance that you're trying to learn more about becoming a residential loan officer. If you don't know who I am, my name is Zevi Shafin. I'm an owner of a wholesale mortgage company in Los Angeles. And in this video, I want to break it down for you as if I was getting started as a loan officer. I'm sure there's a million questions you have in your mind, things from where do I get started? How do I get licensed? And when I get licensed, how do I have these basic conversations with people about getting pre-qualified? And then after that, where do I actually submit these loans and to who? How do they get processed? When do they get funded? And I would say the most important part is marketing my services. How and to whom do I market my services? To answer all those questions for you, I'm currently in the process of creating the part-time residential lender academy, which is actually available for you via link in the description of this video. So please make sure to check that out. As a matter of fact, while I am building this course, it's in pre-launch phase with a significant promotion. So make sure to check that out. With that, let's dive in. I want to answer some of these questions. And I think to keep things in perspective, there's always going to be different segments of the business like we just discussed, right? So I'm going to break it down into 4 pieces. And the reality is, just like any other business, you're at the start and you're going to need to take these steps to ultimately get to the finish line. And the interesting thing is the concept of creating the academy, basically for you to understand the process from the time I get paid, taking 20 steps back. I think that's the most reasonable way for you to really be able to comprehend that outside of doing it yourself. The first bucket is going to be licensing piece. And I say that because when you're originating a 124 unit, nationwide, it doesn't really matter, you need something called an NMLS license. It's a unique identifier number that basically is attached to you as an originator. Now the thing is, you could work at a bank or you could work for a broker that is licensed by the DRE, which is the Department of Real Estate, or you can work for a broker or a lender that is licensed by a California Finance Lender's License in California, or outside California, you would have to look into that. The NMLS piece is going to be different depending on where it is that you actually work. Definitely something to keep in mind, pros and cons on both ends, especially when it comes down to compensation. I'm not going to deep dive into this, but I just wanted to put that in your head so you know what you're up against. Moving on to step number 2, which is going to be the basic conversations that you're going to have with prospective borrowers. And now the reason I say that is because when I got started, I actually got started at the bank and they put me in the corner. And the idea was that when people come up to the teller and a teller sees some kind of an escrow deposit, they let the borrower know, or in this case, the customer, that there's a mortgage loan officer at the corner over there and they can approach me and get a competitive bid. That's the idea. But the truth of the matter, that didn't really happen. And for that to happen, you gotta have some pretty savvy tellers and you actually have to educate them and train them. The loan officer has to do that for these people to be able to do that particular piece of the job. However, being that I never got trained, I didn't really know how to even pre-qualify an individual, to have these basic conversation was virtually impossible. And therefore, you got to make sure that, unlike myself, you get properly trained to be able to speed up that process. Because by having a basic conversation with somebody specifically about their income and their expenses, you should be able to derive at something called the DTI, which is the debt to the income ratio. And in most loans, the debt to income ratio should be between 45 to 50% for somebody to qualify. And if it isn't, then you know very quickly that you're wasting your time and that borrower is not going to qualify unless you change things up, change the loan amount. Maybe they're going to, buy something a little smaller instead of buying that big house. Things need to move. At the bank level, they're going to tell you that you can't make a credit decision, and therefore you're going to need to collect all the documents for everyone, submit it to the underwriter, and they'll naturally get declined. So that's something that we definitely need to keep in mind. Once you figure that out, and you have a basic understanding of how the flow works, referring back to the Part-Time Residential Lender Academy, because these are all very important pieces to the puzzle. Being able to understand how to get licensed, being able to know where you're going to work, and then having these basic pre-qualification conversations so you're not wasting a ton of your time. You're working on commission. Truth of the matter is nobody cares except you. So if you're spinning your wheels and not making money, that's awful. And this is basically your deal structure. And I say that because this could fall under various categories, depending if it's like a QM loan, that just a general loan that you use your tax returns, W-2, to get from like a local bank. These are typically sold to like the most national investors, which are Fannie Mae and Freddie Mac. And so if that's where you're originating most of your business, you might be working at a bank. Otherwise, you also have non-QM. The reason I say that is because if you're tied into just one bucket of loans, it becomes very restrictive as to what you can do. Your hands are kind of tied unless you're just, offering best rates and everything on this particular bucket. By being able to offer other programs, which typically are not offered at the bank, like non-QM, and also private deals, which, working with private investors, hard money, things like that, the deal structure changes. And so you need to know how to be able to package a deal correctly. And again, it kind of comes from having these basic conversations, because if I'm going to have a basic conversation with somebody and I'm going to say, okay, cool, you're self-employed. Yes. How much money did you make last year? They're like, well, my company grossed $1 million. All right. How much of that did you write off? Like all of it. Okay, cool. So your bottom line is 0. Yeah, but I make a lot of money. You already know that using their tax return is not the way to go. We're going to have to use alternative documentation. They need a non-QM loan. So basic conversations is what's going to lead you to that. Having to put together a deal that's never going to come to fruition is going to be a huge waste of your time. All things that I'm going to cover with you in the Academy. Now, as we understand this deal structure, which has a lot to do with packaging and submitting to processing. Now, you don't want to do your own processing, because processing is a full-time job. You want to have a full-time processor who's either in-house or a third-party processor doing a lot of this work, which leads us to getting the business, which is the most important part, right? And that would be marketing. So, in today's age, obviously, you have a lot of different ways to market yourself. As an example, if you're watching this on YouTube right now, then this is one way for me to market myself to you as somebody who's an authority in this space. And in exchange for that, the value proposition that I bring to you is being able to bring a course to you that would basically go through all these steps and have you up and running, ready to be able to originate loans, right? So that's my value proposition. As a marketer, there's always got to be a value proposition when you're reaching out to your target audience. And the beautiful part about it is most of it doesn't cost you anything. You just have to pay with your time, because you could post content to YouTube, to Facebook, to Instagram, to LinkedIn, right? And you can create a lot of noise on social media. But I got to tell you this, from my personal experience, all this is great. A lot of the business comes down to having relationships, right? And these relationships is what keeps the hamster wheel turning, all right? So in this video, again, I just wanted to give you a very high overview of what you can expect as somebody who's thinking of coming into becoming a residential loan officer. It's a very lucrative career. I think that when you look at, right now we're in February of 2025, and so the business is cyclical, of course, because rates go up and down. But what I found was, when I tried to get into the business many years ago, that I came in at a time where there was a lot of activity and nobody was willing to train me at the time. Having these type of programs wasn't popular. And so I was younger, the internet wasn't even a huge thing just yet. And so I didn't have access to all this information that you have today. But in my opinion, having a mentor is one of the quickest ways for you to be able to get from point A to point B very quickly, so you don't waste a lot of time trying to figure it out. And that's something that I did not have. I kind of had to learn a lot of this stuff on my own. So with that, if you guys have any questions, please drop them in the comments below. I would love to hear from you. Let me know what you learned from this video. Let me know if I missed anything, what other questions you have, because you're the one who's actually coming on board to trying to get into this new profession, all right? Otherwise, if you enjoyed this video, please remember to give it a thumbs up, because that's the only way that these videos get pushed through the algorithm, so other people like yourself who are looking for this information can find it on the internet. And lastly, of course, if you enjoy these type of videos, feel free to subscribe. I appreciate you being here. Thank you for watching this. Good luck on your journey, and I hope to catch you on my next video. Take care.